Good morning, everyone, and welcome to another edition of Bleeding Crypto's Morning Brief. Today is Saturday, April 1st. Hope you guys are having a good day, morning, or afternoon, wherever you are in the world. We're going to take a look at Bitcoin. We're going to take a look at the markets. We're going to take a look at the heat maps, the liquidation heat maps, the spot market heat maps. We're going to have a good show. We're going to go over everything and see, are we going to continue? Are we done? We're going to cover all of that. But first, if you guys can please hit the like button, I would really appreciate that. It just helps get the word out, gets the algos running on YouTube, gets this video to more people out there. And I'm trying to grow my YouTube channel. So if you guys haven't subscribed yet, if you guys would please do me the favor and just subscribe. You don't even have to hit the bell notification, to be honest with you, because I post all my stuff on YouTube, on Twitter. So if you follow me on Twitter, you'll get the notification. But if you can at least subscribe and hit the like button, I would greatly appreciate it. Also, if you guys want access to my free Telegram channel, just DM me. Send me a DM on Twitter, and I can get you guys access to that Telegram channel. So let's go ahead and we'll get started since MEX Global Exchange is sponsoring this video. So a big shout out to MEX Global that's sponsoring us here, and I have the link to the exchange below in the comments if you want to join using my referral link. I'd greatly appreciate it. They have incredible liquidity. MEX, Binance, and Bybit are my three favorite for liquidity. They absolutely have the best liquidity out there. All right, guys, so let's see here. We have a busy chart. So you guys know how I feel about a busy chart. So I think I'm going to clean this up. But before I clean it up, I'm going to actually start here, kind of talk a little bit about what we're looking at right now, and then we're going to clean it up, and then we're going to give a good analysis. We're going to look a little forward, a little behind, and try to come up with a game plan. So for right now, this is that green. Here's that green band that we were talking about in the previous video. So we were inside of this channel here, and as you can see, we've been trying to break above. We've had some few deviations. Now these two yellow here are heavy liquidation areas on the HyBlock liquidation map, heat map. Yesterday's pump to the upside was strictly just a liquidity grab, just like it was here. So when we see this, we want to believe that the market is going up. Two ways the market goes up: liquidity hunts and actually moving up, meaning it's got some meat to it, meaning that it'll move up, it'll consolidate, create a bullish structure, put in a higher high, put in a higher low, and continue. This here is not the market continuing to go up. This here is just straight liquidity sweep, come right back down, and even just to make a point, it came down below all of this action to say, F you, I'm not going up. I'm just basically taking everyone's money, coming right back down. And then look what happens right after that. We just dumped after that. So the market doesn't want to pay the shorts. The market knew it was going to do this, and the market says, okay, if we go down, we're going to have to pay all these guys that are shorting. Well, how do we and they're not going to knock everyone out, guys. Remember, there's exchanges out there that are doing 150, 125x leverage. It doesn't take much. 0.46% will knock out a 100x leverage, and less than that for a 125 and 150. I mean, they're like a 0.15. Literally, the price moves like $20, and boom, you're out. So when markets go after liquidity, it's going after the big boys, those $100 million contracts, those $50 million contracts, and I'll show them to you in a minute. When we get to HyBlock, I'll show those to you, and this is going to make a lot of sense. This little liquidity hunt, when I show you the actual contracts themselves, I'll take the time. Hopefully I'll remember to do that because I don't normally show you that, but I will show you that so you guys can understand what I mean. So before they go down, they want to do this. They want to knock out all those high leverage shorts and then go down. Same like stop hunting. When the market wants to say, for instance, your position for a long, you've got your stop loss in place. It comes down, hunts your stop loss, and goes back up. There's algorithms out there. You're not trading against a person. You're trading against an algorithm. You're trading against an algorithm that says, okay, when certain amount of orders get filled here, and they have a target to the ups and they're longing, whether it's spot or derivatives, we want to make sure that if they put a stop loss, if a stop loss is entered into the system, enough of those stop losses are entered, we're going to come down, we're going to sweep it and come right back up, which is why you hear that complaint a lot from everyone, from every trader. Sooner or later, every trader will be like, damn it, I got stop hunt. Damn it, I got stop hunt. Generally, I don't put a hard stop. I don't like hard stops. They're hard stops is a way for you to tell them, hey, I'm over here. Come and get me. I'm over here. I don't use them. I much rather use alerts. When you go to bed, you got two choices: close the trade or put a hard stop. Then you have no choice. But when you're awake, alerts, absolutely the best way, because they don't know what your intention is. Their intention are, and if you guys are wanting to do a swing trade, for instance, you're holding it for, maybe a couple of weeks, or even a long-term investor, they don't know that. And most long-term investors buying at the bottom are not putting a stop. They're accumulating on the way down. So that's kind of the reason that you see a lot of these moves like this and like this happen, is basically just to hunt you down and hunt your positions and take them out. So let's move forward. Let's do this. I'm going to go ahead, and now that I explained with this, I think I just finished telling you guys, right? This was just a hunt here last night. So last night we came up here and we knocked out this area here on the HyBlock data. We didn't go after this one, but we did come after this one and came right back down. Again, this wasn't a true move, just a liquidity sweep. So let's do this. Let's go ahead and just open up another layout just to make it a little bit cleaner. Here we go. All right, perfect. This way we have a nice clean chart to start with, because I do want to cover a lot of things here, and I want to make sure that we have a blank slate. Let's start with, I'm not even going to put my indicators on right now. Let's go ahead and just start with just strictly price action, just looking at the way things are looking at the moment. Let's go to the higher time frame. 12 hours is one of my favorite high time frames to look at. All right. So we had this continuation. We have this push down from the latest push was down here from 19.5, and we push, consolidate, and we're actually getting stuck here. So it's a little bit different. When you're pushing up and you're consolidating like this and you're moving up, that is a nice structured move. But when you're lagging here, when you have all of this rejection here, you need to be careful. We talked about, and I'm going to do a refresher, we talked about areas where this run here will most likely take a pause. And let's refresh our memory real quick here. Let's go to this weekly time frame, and it's real clear. We talked about this area right here, right in there. You know what? I'm just going to try to find a candle body to be a little bit cleaner. Right there, 30,000. We'll make it. This is 29,917, but again, for the sake of the video, just a round number, 30,000 here. It encompasses a lot of these wicks here, some of these candle bodies, and this area, this area, this red line is 2-year long support. For 2 years, this line acted as support. Now, putting your hoping aside and wanting to see this at 35, 40, 50, 60,000, you have to understand that when you have an area like this of such strong support, you're not going to break through this and start finding acceptance and continuing to go without a little bit of pushback. That's what the market normally does. Could it blow through it and go straight to 60? Yeah, it could. But again, remember, guys, we deal in the realm of possibility. What is the highest probability? Well, I guess not possibility, of probability is a better word. What is the highest probability when we reach this area here that the price action is going to do? More than likely, it's going to pause. It's going to get rejection. It's going to come down. It's going to try it a couple of times. And if it's the market, the bulls can step forward, it'll break that. It'll continue to just knock on it and knock on it and knock on it until it weakens it. And hopefully, if there's enough momentum, if we reach this area here and all the oscillators are maxed out, it's less chance that we're going to break through. If we're reaching this area here and we're reaching it on declining volume and the oscillators are overextended, Do you think that the probability is going to be on the side of the bulls that we're going to break and go right through and hit, you know, 35, 40, $48,000? No. So what's going to happen? We're going to see a higher low, and there's nothing wrong with that. By wanting a higher low doesn't constitute you flipping to a bear. It's understanding that market structure needs to be put in a certain way to assure that well, not assure, but to make it more probable that that continuation is going to happen. A consolidation here, the longer it consolidates, the longer it gives the oscillators to reset. When they come down, it helps it even more to reset. And then on the next try, you're not going in with a fresh momentum. You're not going in with an exhausted momentum. So that'll give us a better chance of breaking through this if that's the route that we're going to go. But eventually, we're going to correct this move the same way we corrected this move. This move here, we corrected it here, not enough. We tried it again, and look, we failed. Why did we fail? We didn't have enough momentum built. This was a huge move. And this small little correction here wasn't enough for us to break that 25,000. However, we gave it a really good correction here, a nice little relief, and then we were able to finally break that $25,200, $300 level. Now we're reaching another major area of, this here was a 6-month resistance. This one here, that was 6 months. This is 2 years. Think of this, guys. Think of this area right here as a rubber band. You are having a nice little thrust. Okay, now you're pulling back on that rubber band here. You're pulling back on that rubber band, but you barely pulled it enough. You barely pulled it maybe an inch or two back, and you let it go. What's going to happen? Is your rubber band going to go very far? Unlikely. But if you give it a good pullback and you let it go, you're going to get much further. So that is probably the best analogy that I can give you as far as understanding why these pullbacks and why you hear traders say pullbacks are healthy, because this serves a purpose. It allows us to get to that next. So if you are a bull, you want to see these pullbacks. Obviously, when you do pullbacks, you also have to respect certain levels that you don't want to see broken so that you can see the continuation. Because there are two different types of pullbacks. There's a continuation pullback, and then there's a consolidation pullback. A continuation pullback, typically, I'm looking for a 0.382, 0.50 on the fib. Here, I'll put it on here. From this move. So this is my continuation roll. 382 to 0.50. I don't want to see this close below 0.50. If I see it close below 0.50, then I'm looking for this. Then I'm looking for this area here. I'm looking for, if we close below that 0.50, I'm looking for consolidation inside of here, and then a move to the upside. When we do a continuation rule right here, and we don't close below this here, just like we did here, we have a greater chance of just slingshotting to the next move, to another higher high. So I hope that makes sense. And I go in this in detail in my education program. But this here basically is textbook. Now, I want to see a $35,000 move, but doesn't mean I'm going to get it. And it's very unlikely I'm going to get it in this area here. We need to see that pullback. Now, the fact that we're so close to this $30,000 area, I really believe that, well, not believe, but I'm hoping that we can at least tag it. I'm a big proponent of back testing. Now, if we're going to be talking about back testing, if we move this down here and we just hit where we hit last night. So yeah, right there. Last night, I believe we put that higher high was last night's push to the upside was our new higher high, our new high for the year. Now, if we put the wick on there, let me see here. The high was 29,184. So let's just be fair here. 29,184. 29,184. So let's just do that for right now. Okay, so if we do that and we look to the left, did we backtest prior support? This was support. This touched that line. this candle touched that line, this candle touched that line, and this candle touched that line. So did this one, so did this one, so did this one, so did this one, and so did this one. So yes, the majority of these we already back tested. However, I guess just the bullishness in me was hoping we can get a little bit higher into that area there. And you could actually, like I said before, you can make a case of this here, right inside of here. You could actually make a case for this area here. But again, if we want to talk technically, we've already back tested it. With that move yesterday, we back tested it. We back tested the majority. If one or two of these wicks would have hit that line and nothing else, I would have said, but we have a lot of confirmation. We have more than 3. Typically, I like looking at the rule of 3. So we definitely has hit it. We hit that line at least more than 3 times. So this could be the top of our move before we put in our next higher low. Now, for the next higher low, let's go here. Here's what I'm looking at right now. This is what I'm looking at right now. Right here. So we've got 2 things working for us. Let me go here. Okay, so here I'm looking, basically, we're going to assume that this is the top and we're not going to continue any further, and we're going to start seeing a pullback from here. Again, when we're analyzing something, we can't know for sure what's going to happen. We can finish our thesis and an hour later this thing goes up $1,000. But again, looking at probabilities, let's just say for the sake of the video that this is, and the weekend is usually lower volume, and this is the top of the move. Am I looking for $15,000 again? No. Why would I look for that if so far we have proven that we are putting in a reversal market structure? We broke through the previous 3 higher lows. We hit a bottom here. And I'm going to say we hit a bottom here because of this structure. I didn't say this was the bottom when we were here or we were here. We needed to break, for my personal analysis, we needed to break these 3 higher lows, lower highs. We break these here, find acceptance in here. And I specifically said in the previous videos that if we break it just barely and sit here on top, it's very unlikely. It's not going to be convincing. This candle here, to me, says it all. This, to me, again, reverse. This doesn't tell me reversal. This tells me reversal because of the way it behaved when it hit this resistance here. The 6-month resistance, it put in the type of candle that it needed. And then it followed it by putting these 2 weekly candles up way above this line here. So now I'm not looking for 18,000, 16,000. No, I'm looking for the same exact thing. I want to see the continuation rule. I'm putting this rule here. I want to see us hit 382. And let's just say we follow what we did here, because the patterns, these types of patterns do like to repeat themselves. So we come back here and we hit this 0.5, we hit the 0.50. Now, can we find confluence with the 0.50? Let's see. I think we can. Okay, so we have this here was an area, like I said, of 6 months. However, do you notice something different? Do you notice something similar about this line here with these 2 areas? These were the top end. This was the top wicks of these. However, look at this. Look at this. Do you guys notice something different? Besides the fact that it lines up with the 0.50 perfectly, do you see something similar here and something similar here? Both candle bodies, 6 months apart, with the same configuration, green, red, end up right here at the 50% line. That's no coincidence. This is the crazy part about, if you understand, if you use the Fibonacci rule, it will really blow you away on how all this stuff lines up. Because then you have to think about when this happened back here in August. Think about all the things that needed to happen in the market. All the billions, hundreds of billions of dollars needed to be exchanged so that, 8 months later, it lines up perfectly well with the 50% fib, and we're looking for a higher low. It's just, it blows my mind. Maybe I'm overthinking it, but it's real fascinating to me. So this here, to me, is a very valid thesis that we come down here, hit this 50%, 382 or 50%, and then we continue further. Now, let's just say it doesn't hit here, and it closes. Remember, a wick is fine. Candle bodies need to stay above minimum 0.50. If not, okay, does that now invalidate? Are we now back below here? Since this was my line in the sand for me to believe that I'm not going to hit 886, which was $11,377. Does that mean if we close below here, now it invalidated all of this? No, not at all. Because you know why? Here, let me show you. We could still hit this area here. 0.618, 706, and 786. If it hits here, what are we doing? We're still way above this higher low, and we are now in a more of a consolidation stage. We're now consolidating here, which again, remember what I told you guys, the more we consolidate in an area, the better it is for the price action, the healthier it is for the price action, because it allows those oscillators to come down. Guys, the oscillators like the MACD, RSI, yes, they're not leading indicators. However, you see the relationship. People use them for a reason, guys. Though they're not a leading indicator. If you look at a MACD and it measures momentum, when that momentum starts to drop, it's very evident. That's how we come up with these bear divergences or bull divergences on the premise of that momentum. So those do matter. So you want to make sure that you understand that those oscillators are going to help you gain that next move to the upside, depending on which way we're looking at the market. So a move down into here, perfectly normal. Still hasn't broken my higher low. Still in line to go to the upside. Still doesn't invalidate all the work that this put in here for this, because it is within the normal market range. Now, what happens if we break below here? What happens if we break below this higher low and all this market structure is taken away? Does that mean that we're going to new lows? I don't think so. And here's why. Because of this. You cannot ignore all of this here. Right now, this is now the new low. Right here. When will I believe that we are going lower? When we close below here. That's it. When we close below here. But do you know what needs to happen? Guys, these markets are $1 trillion. They don't just come down here because you want to fill your orders down at $12,000, and yeah, it's just going to come here. It's going to hit that order and it's going to bounce up. Trillions of dollars don't move like that. There's a certain discipline, which is why we use TA to measure that discipline. Could it go straight down? Yeah, on a black swan event, things like that happen, but you cannot TA that. You cannot think, okay, I'm going to get filled here because a black swan should be coming because there's talks about this and this. No, that is not the way an analyst thinks. An analyst thinks and creates a plan on the data that's in front of them, not on what could be happening in the future based on some sort of news events. That does not pertain to any of this here. If it's not on the chart, you cannot map it. You could put a stink bid. Yeah, sure. You can say, you know what? I'm going to put a bid here at 12,000 or 10,000. Something happens I don't know about. I've got some USDT sitting on the exchange. Instead of leaving it there on US doing nothing, I'm going to put a stink bid down. I can't tell you how many times throughout the years I've seen this market. I've seen the craziest one that I've seen was back in 2017, Ethereum on an exchange. I think it was BitMEX, or I forgot which one it was. Anyway, Ethereum went all the way down to 10 cents and came right back up. A lot of those orders, I think, what was it, Binance? A lot of those orders got filled. They got filled. Now, Is that normal? No, it's not. But again, that's why you call it a stink bid, in case, just in case. But when you're doing a thesis, when you're analyzing a market, you cannot plan for that. There's nothing on this chart that is giving me any type of hint that that's going to happen. So looking at this market structure, looking at this downward market structure, looking at this reversal market structure, how it's building into that reversal market structure, and again, to me, this here is the way I view the market. It was that reversal. Now I'm looking for continuation rule. Continuation rule gets invalidated. Okay. Throw on my consolidation fib on. My consolidation fib is working. Great. We go up. My consolidation fib gets invalidated, drops below here, maybe touches this support here. Does that mean that this structure is invalidated? No. As long as we don't break this higher low, it's still in play. Because we can now treat this as what? If we come down here and we break this higher high, higher low structure, all it does is just actually be really bullish. It now confirms this move here, a double bottom. And we could easily move off of that double bottom, meaning that the market came down here. The market participants said, no, we're not going to allow it to drop below here. This to us here is where we're going to defend the market. The way we defended the market here, we're going to defend it here. And it can easily go up. And that would even be more bullish. Why? Because that rubber band got stretched some more, maxed out, and then that slingshot, boom, that solidifies. This here was tested. It held. It's a proven area of support because not only one touch, but if you look back to the left, it's been touched as support and resistance absolutely clean, which is why we stopped the way we stopped. You think this happened by coincidence? No, take a good look. Take a good look at that drop. Again, nothing happens by coincidence. Look at that drop. Now, snap a line and look to the left. Wow. Look at that. Absolute perfect support. Resistance, 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 resistance. Support, 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 support. Look at that. This fell here for a reason. So if we come down here and we bounce, absolutely valid. Now, again, what I said before, the only way I'm going to think lower, because we don't know what could happen, is if we break here. Once we break this, guys, then we'll talk about downward targets. But right now, it'd be ridiculous to talk about them. There's no point. There's too much above this price action to hold that price action from breaking here. We've got, like I said, continuation here. We even have this neckline here. So we can easily wick. And when I say we don't break this, guys, remember that there's also a thing that we have to consider is liquidity sweeps. Okay, liquidity sweeps, just like the one we saw in the beginning of the video in the hourly time frame where we have a quick move up and a quick move down, those don't really count. You'll use them on your TA, yes, but I mean they don't count as far as having meat. There's really no meat to them. And what I mean by that is that move to the upside that we had a week ago, that didn't cause the market to continue to move up. That wasn't a new high as far as consistency. We didn't stay there. We didn't consolidate. We just came right back down because it just swept the liquidity. So we could easily sweep a wick below here, close the candle body here or above, and would still be considered double bottom. The way I view it, it would still be considered a double bottom, and we can still move up to the upside. Candle body closes really do matter, guys. Just like we saw here, how we candle body closed at 382, and look, what did it do? Look at that rubber band effect. Look at that. Everybody sees the market differently, guys. When you do a TA, you're basically giving your opinion. It doesn't mean that they're wrong. It's just a different way of looking at it. So you want to make sure that I see a lot of guys different. There's a lot of good traders out there, and I look at their videos and look at their analysis. I'm constantly looking and studying. Just because I know TA doesn't mean that I know everything. I constantly I want to grow. There's a lot that I don't know, and there's a lot of techniques that I don't know. And as the time goes by, I learn new techniques from different traders, and that's what helps you to advance. So you want to make sure you always have an open mind to different possibilities. Look at invalidation and validation. I think are the two most important aspects when you're analyzing an asset, because those are going to tell you if your analysis was correct or incorrect, or maybe not even so much as correct. It could be correct and still get invalidated. Doesn't mean it was incorrect. It just means that didn't work out the way you thought because of the market. The market said, no, we're not going to do that. We're not going to continue, or we're not going to go down that low. It got front run and it continues to go up. Doesn't mean it was incorrect. It just means that the market didn't participate into your analysis. All right. So now I want to talk about this, guys. I want to look at the monthly, and we're gonna hit the heat maps in just a minute. Give me a second, because I think this monthly really is one that we need to pay attention to. And here is why. Look at the volume. Look at the volume. Again, I keep on telling you that to me this was a reversal candle because of the way it behaved, the way the market structure that we put on here. And when you look at the volume, it makes a big difference. Could this have just been another lower high? Yeah, it could. It could. But the behavior of this area here leads me to believe that it's not. It's very different. And you can look at it here. This was a higher low. Oh my Lord. It's too early in the morning. This is a lower high against this high right here. But look at the behavior. You see this stair step? This is very different. This was you can almost see it here. It's almost like a falling wedge pattern. But obviously, when you go down to a lower time frame, you can see the lower low patterns being put in here. But you can see the way this just broke out and then put in that higher high, higher low pattern against these lower high, lower low patterns. So, and we broke through those necessary areas. Now, look at where we are as far as this area here. I like this area here. And some people actually are expecting us to come up into this area here. This area here makes sense too. This 31,853 will hit this and this. But we already talked about the possibility that, you know what? We have respected, and we've hit this more than once as support and resistance. So this can very well be validated. Now, if we do go up here, great. But I don't think we're going to go much higher than this. Let's look at. I want to look at the heat maps, and let me go to the lower time frames. I'm going to lower time frames, and we're going to talk about. Well, actually, let me go to the daily, and I want to show you something interesting on the heat map for the spot market. All right, I want to show you something interesting for the spot market. Look at this, guys. This is something you want to know. You guys remember when I was posting this back here? I was posting this heat here, and I was saying that the market makers are supporting the price at $25,650. Then they moved it higher by $100, $26,750, and they kept it there. And then what did they do? They removed it. And you know what they did? They lowered it to $25,450, and then boom, they took all heavy support out, and they dropped it all the way down to $23,250. You need to pay attention to these heat marks. These heat signatures do not tell the price you need to come here, but more often than not, the price action does follow that. Why does it follow that? Because you have to understand what these are. These are liquidity pools. When the price is coming down, if it doesn't have enough liquidity to support that price up in this area here as it's coming down, and there's no real orders, it's going to continue to come down until it hits those orders there. Why didn't this price action hit here if that's the case? Because people will front run it. This here gives you an insight to where the market makers want to buy. They believe that the price is going to come down in here, and they're willing to put up their money and support it there. Remember what I told you about the example of Bitcoin going to this area here and double bottom? Because that might be the area where the market makers say, I'm not going to let it go below that. Here's where I'm going to step in and support it. Well, if you look at this here, the market maker is saying here is where I'm going to support the price action. But I want you to pay attention to the amount that they dropped it now, 23,250. Go to our TA, 23. What did I just say? Jesus, I'm losing my mind. 23,250. 23,250. What does that line up with? Anything? Let's snap it in. Let's snap it in here. Let's put a line in here. I'm going to make this yellow to mimic the heat map. 23,250.22. Right there. Right to 618. Right to 6. You think that is a coincidence? Right into 618. And look at this. I want you to pay attention. Oh, hold on. I want you to pay attention to this. This was that heat there started on the 28th of March, 3 days ago. It started 3 days ago. And 3 days ago, from 3 days ago, we actually pushed higher. In order for us to get to 618 here, the golden pocket, the golden Fibonacci area, we had to have pushed last night to 29,148. Because had we not pushed to 21,948, this wouldn't have lined up right. And yet, somehow, 3 days ago, it already lined up with the golden fib. I mean, when you dive in that deep, it just blows. To me, it does anyway. Maybe people look at this, who cares? I love what I do, and I'm really passionate about what I do. When I look at stuff like that, it just, wow, it just excites me. It excites me because you can see the accuracy in TA, and it drives me crazy when people say TA doesn't work, and you're just like, what? How can you say that? How can you say that TA doesn't work when you see things like this happen? When you see a price 3 days ago get supported that lines up 3 days later with an area of the most famous area inside of a Fibonacci, which is a 0.618. So this is where the market makers are wanting to defend the price. Now remember up here, this was a 382.50, but we may actually come down lower, or we get what? We get front run. Now, if we get front run, think about again, we want to analyze a thesis behind that. So we've got a price here. We know the market makers want to defend it. We got the 618 lines up perfectly, so that's a good confluence. But what are these two areas, guys? What are these two areas? Think Twitter. Everyone is talking about loading up at 25,000, 24,800, 25,000. Could this get front run? Could this get front run like it did here? Could this get front run like it did here? Absolutely. Absolutely. So our 382.50 continuation rule can very well still be valid because it can get front run and then we continue. But the fact that we're getting support from the market makers way above this higher low should tell you what? That even they are planning to move it. They are looking for the possibility of going higher, or they wouldn't be stepping in here. They wouldn't be stepping at the golden pocket. And they turned it on 3 days ago before we knew that this was a high. Because look, let me just show you something real quick here. Say 3 days ago we were here. Look, it wouldn't have lined up. It doesn't have to line up exactly, but the fact that it does says something. The fact that it does says that everything is planned way ahead of time by people much smarter than us. Let's go over the HyBlock data now. And I want to show you those contracts that I was talking about. And I want to show you the behavior, the behavior of price action and of the mindset of the market makers and the mindset of retail. And you can see the mindset of retail. Oh, actually, let's look in here first. And I'm going to show you that mindset that I'm talking about. Let's look at this here. Look at, this is the liquidation heat map. So this is different than what I just showed you here. This is spot. This is on spot exchanges, the aggregated buys and sells. Here is the derivatives contracts. So somebody takes out a short, and at this point here, that short is going to get liquidated depending on the leverage he used. Higher the liquidations, the lower the leverage was used. Because remember, a 100x X contract gets liquidated at 0.46%. Barely moves and you're gone. A 1x means that the price has to double before you get liquidated. So say for instance, somebody used just a 1x, the minimum 1x. At $34,000 heat, that means that the people who did a 1x short at $17,000 are going to get liquidated here. They're going to get liquidated right in here at $17,000. That's what this heat here at $34,000 means. Or they could have easily done it here yesterday and put a certain amount of amount of leverage, but excuse me. Okay, sorry, I'm back. But minimum at 17,000, at 34,000 you're out. At 34,000 you're out. All right, so I want to show you this real quick here before we go to those contracts I wanted to show you. We are dead centered, guys. We are dead centered inside of an area here where it can go either way, and the market makers, they're going to make money. The market right now is hedged almost perfectly. You could almost meet tat for tat each one of these heat signatures to cancel out the other one. So usually this is leaned one way or another. But one thing we can see, let me look, I'm going to do this here. One thing we can see is how the market goes after that heat. You can see the way we come down and we can tap that heat. We can actually see it even better when we go further back, when we go back 7 days. Let me show you. When we go back, you can really see the way the price action just goes up into this heat, and look, and then comes back down. Heat starts to form up here, and what does it do? It comes back up here, knocks it out, then comes back down to where it was. Look at this. This was ranging here, and while this was ranging, people were getting scared, and they were building up their shorts. How do I know that? Because the heat was building above the price action. When the heat builds up above the price action, that means that shorts are building up. And what does it do? It comes and says F you and comes right back down and continues to consolidate. This shit is insane. The way the market makers control the market and take people's money is jaw-dropping when you look at and understand how these liquidations, this data helps you to look at the market. Now look at this here. Look at the way we just came right here. Look right there. Tap into those areas, and it starts to build, and we start climbing higher and higher. But we're in an area right now that either one, it's hard to know which one of these they want to come after, because no matter where they go, they're going to make money. Let me show you those contracts I was talking about, because this again gives you an idea of why when we're dropping, all of a sudden we just flare back up and then come back down. Well, let me show you the mindset of a market maker and of retail, of what happens within that price action. Okay, we are climbing here, Okay, so actually let's start back down here. We're dropping, and as we're dropping, you see these lines, you see these bubbles in these lines. These are contracts. When these bubbles are on the right side of the price action, those are new. Those are new contracts. So when we're up here and we start to show weakness, somebody stepped in and says, I'm going to open up a $36.1 million contracts, over 100x leverage. See where it says on the box where it says short liquids, one ... That means that it's either a 125x or 150x contract. So when it does that, you can see that the price action is going down. And look, we have one for 36.16, one for 52, one for 31. These contracts are opening up. These contracts are saying, I'm going to piggyback on this move. Keep in mind that this is the 1 minute chart. So this moves pretty quickly. but this gives you a really good detailed of what minute by minute what's happening. So you have 88 million, 44 million, 95 million, 34 million, 54 million, 43 million. Look at this all the way. And then we go all the way down here. We cleaned all of these contracts up. And the way you know is because see how these lines, they end at the price action, they don't extend. You have all this open air. That means that all of these here were liquidated. Now watch what happens. All of these guys that thought they were smarter than the market, all of these guys here that open up those, I mean, this is like, what is this worth? All these contracts are probably worth about $400 or $500 million combined. Then look, boom, we come up, we knock it out. Boom, we come back, we knock it out. Boom, we come back, we knock it out. Look at this, we knock it out. We knocked down everything. Right here, at this point right here, we knocked out all those contracts. And that happened, this is a 1 minute chart. So it happened less than an hour. It just came and knocked everyone out. Everyone who wanted to piggyback on that ride came back and took it out. And then we kept on going a little bit higher. And as we're climbing, the same thing is happening. Now these guys are longing. $194 million contract, 43, 68, 50x, 146, 50x. I just saw right now, 146.75, 50x. Same thing is happening. Then as it starts to build, people start getting confidence. The market calms down and starts knocking. It knocked down 35 million, 43 million, 30 million, 44 million. I mean, all of these contracts here were knocked out on this move here. And it continues to do that. These guys thought they were going to get smart right here. Like these guys, same thing. A rinse and repeat. 30 million, 28 million, so forth and so on. It started opening on the way down here, came back up here, knocked everyone out. Then we had a little spike to accumulative. All of these lines here got knocked out because you can see how we have this open air. That means that everything in this big cluster of 50x and 25x, 100x contracts, all of these just got wiped out in that little push. And if you guys were paying attention to that push last night, that was a quick push. It was a quick up and then right back down. A liquidity sweep right here. Liquidations like crazy. And look at this open air here compared to the way this cluster was here. It's open. It's open. But what's down here? There is a lot of contracts still to be had, and even more so in here. And the delta is green. The delta is green, meaning that the participants believe that the market is going to continue to go up, and there's an accumulative $7.64 billion to be paid if the market continues to go up. When you look at this data, guys, the market makers like going against retail. They like getting paid, which means that if people are going long, and this is green, that's what this represents, the market makers, it's to their benefit to do what? To do the opposite, to bring it down. And vice versa. When this is red, meaning everyone's scared, they're expecting everything to go down, they're heavily leveraged to go down. What does the market like to do? What does the market like to do when it's going down and people want to piggyback? It likes to knock them out of their positions before coming back down because they don't want to pay. Remember the example I gave you guys right here on this right here? Before bringing it down, what did they do? They came and knocked out all of those contracts that were piggybacking, that were building up while this was looking weak. Everyone was like, "Oh no, this is gonna fall. This is gonna come down. This is gonna come down. We're smarter. Let's 100x leverage." Market says, "Fuck, F you." Look, boom, and then it brings it down. So keep that in mind, guys. When the market is looking really weak, expect you can have your orders. Like this right here, you can have some short orders here because as this looks weak, people are building. Let's look at the contracts on live right now. Look, people are building a 53. This is current price right now. So we've got these since yesterday. This is what they've built up since yesterday. $53 million 50x long, 35.5 million 50x long, 53.03 above 100x leverage long. Excuse me, these are shorts. I'm sorry. I apologize. Shorts. I started with this one here saying long. No, I meant shorts. 53 million short, 35 million short, 53 million short, $35 million short contract, 35.89 short contract. So as from yesterday's peak, these are the ones that built. So that's about what, 200 million, a little over 200 million dollars in short. So what do you think if we're going to continue to go down? Would you expect a quick spike like here? Quick spike, knock it out, and then come back down really fast? Well, it may not. It may not. But look what normally happens before we go down. We'll see those random spikes. And at least when you see those random spikes, you'll think of me and you'll think of HyBlock and you'll think, that makes sense. I wonder what was on there. Guys, I have a link for HyBlock. If you guys want to sign up for this data, I have a link for HyBlock. Use my referral. It allows me, every time you sign up, I think you get 30. I don't know if you get 30. I don't know what you get, to be honest with you, but I get an extra month, so that helps me. I pay for this, but the more people sign up, obviously I get it for free. It's good, guys. It's a hustle. If I don't have to pay, I don't want to pay. You know what I mean? If I can get people to use it, and if they like it, if they find this data useful and helps me out, great. I'm not going to hide, guys, that I make money off of these referrals. That's what it's for. Everybody has a side hustle. We want to make more money to put the money back in the market or to do whatever we want with it. But that's what it is. I'm not going to hide the fact that I'm going to get paid from these referral links. And if you want to support it, great. If you don't, that's fine. That's fine. Not that big of a deal. Let's see what else. We talked about the HyBlock data. We talked about the spot market data. Let's see. If you're in my Telegram group, before I put the video on, I went short and I showed it. So one of the things, I am very transparent, and anyone in over the 400 people that are in my Telegram can show you. I actually take screenshots of the actual dollar amounts that I purchase, not to show off, but to show conviction. Because one thing that people like to fall for is that you'll have these guys that will do a 100x or 125x, and they'll show you the percentages. They never show you the dollar amount. Why? Because I don't have any conviction. It's a $5, $10 position, 125x, and when you look at I'm up, 300-400%. You know how many times you had to put that contract out before getting it right, and then to get that engagement? Guys, if you really believe in your TA and you're not looking for engagement, you're not doing 100x leverage on $50,000. Very few guys are doing that. And you show conviction. You're putting your money behind what you believe. Anyone could just take $5 and put a 50x or 25x and then go, look how good I am. I'm up 80% on this. Yeah, but you didn't really believe it that much because you only put $5. So I'm not impressed by that. New traders coming into the space, or new investors coming in, they get starstruck by seeing things like, this guy's always putting in these 80%. Yeah, but all he has to do, literally, guys, when you post those amounts, there's a toggle that says, do you want to show percentages or dollar amount? How many of those percentages have you ever seen a guy post the actual dollar amount? No one does. No one in those high leverage posts how much they actually betted, how much their actually profit is, because they don't want to say, look, I'm up $20. Yeah, but it's 100x leverage. So how small of an order did you put? Well, you see what I'm saying, guys? That doesn't impress me. Show me that you believe in your TA. Show me you believe in your conviction and you believe in what you say you're going to do, and put your money where your mouth is. But again, everyone's different, and I don't want to knock their hustle. That's their hustle. That's fine. But my point is, if you guys want to join my Telegram group, I'm very transparent. Do I always win? Absolutely not. Do I take losses? Absolutely yes. Sometimes it works out for us. Sometimes it doesn't. But you get to understand that that's part of trading. That's part of being a trader, understanding how your analysis can go wrong and can go right, what works, what doesn't work. And the data that I provide on HyBlock and Spot, it does help us to come up with a game plan, at least to get an idea of the insights of what the market makers are looking, where they expect to make big gains, and so forth. And that helps us to come up with a trading plan along with the TA and EMAs and things of that nature. I don't have them on my chart today, but you guys have seen them before. I use a lot of different indicators as well to help me to find confluence on my trading idea. But right now, we're in a nice trade. Right now, we're in profit. Not a lot, but we are in profit. If you guys are on my Telegram and you took the short with me, we are in profit. Did we short the very top? No, I didn't. Why? Why didn't I short here, guys? Why didn't I short here if I'm looking at this here? Because, first of all, I don't know. I don't know if we're going to go. I'm hoping that we get up to $30,000. So I don't know. I'm not trying to short here. I'm trying to find a reason to short. A reason to short is, okay, you're starting to show weakness. The EMAs are starting to cross. The EMAs are getting weaker. The indicators are showing us that we have more downside to go. The probabilities that we have more downside. There's a lot of things that you factor in before I can take one. Yeah, sure. Can I open one here for $10? Yeah, I can. It's not that big of a deal, but I'm not looking to make $10. I'm not looking to open up a $10 position. A little bit more size. I'm trying to make a living here, so it's a little bit more size. So if I'm going to use a little bit more size, I need a little bit more conviction. I need a little bit more data. I need a little bit more convincing, finessing, if you will, before I take that short. Why? I'm too scared to take it up here because I don't know. It could easily go the other way. And I don't want to be that much underwater or trigger a stop loss and lose a few $100, $400 or $500. I don't want to do that. So I'm going to wait a little bit. When I feel confident, more confident, I'll take it. I'm okay. And when I get out of the trade, same thing. Think I'm going to get out right here? No. If I'm making good money, I'm going to move my stop loss, my break even, or my stop loss and profit on the way down, 35%. So I'm never going to hit the very bottom. I'm always going to be about 3 to 5% because when this thing bounces, it's going to bounce hard. It's going to hit that 3, maybe 3%. So I lost 2% on my profit that I could have had, but I didn't know that we were going to bounce exactly like I showed you before where prior resistance and support was. I don't know that. I am not that good. All I can do is spot strength, spot weakness, take a chance, and I want this here. This is what I want. This is what I focus on right here, the meat. I'm focusing on the meat. I'm not focusing on this, and I'm not focusing on this wick. I'm not focusing on that wick. I want the stuff in between. Hope that makes sense, guys. I think we covered everything that I need to cover, and I'll continue these updates. Remember, you guys can play these. Well, it's a little too late to say that. Play it at 1.5x speed, but if you hit a regular speed, it's almost an hour. Hope they find you useful. Again, if you can support my referral links, great. If you don't, that's fine. If you want to join my free Telegram group, send me a DM, and hope everyone has a great and safe weekend.